In today's video, Spotify is slowly losing market share. Are they really in trouble? Furthermore, Apple is increasing production on their iPhones, but why are they so bullish? Next, Logan Paul created a scam coin called Dink, Doink. And finally, a bunch more news coming right up. Welcome back everyone, I'm your host Edward, and on this channel I talk about stocks and crypto news, so if that's something you're interested in, feel free to subscribe and hit that like button down below for the YouTube algorithm. And yeah, let's not waste any more time and dive right in. So as usual, I'm just gonna go through the markets, and today the Dow Jones, the S&P and the Nasdaq are flat again. I'm getting tired of saying that the market is flat, but it is very boring, I'm not gonna lie, which is why I think we're in the phase where we're back to stock picking, and that's more important than following the market. Now in terms of the crypto market, it is very flat today as well, nothing too crazy going on. But yeah, in yesterday's video I said that we're kind of in a crab market, nothing too crazy going on, just sideways trading until bullish news or catalyst comes out. Flipping to hypercharts, we are heading to earnings season, and it's gonna be very exciting. But starting from July 27th, that's when it gets interesting, because a lot of tech companies and major companies will be reporting their Q2 earnings. So the first article that I want to talk about today is Spotify, and the headline kind of caught my attention because it seems like they are losing market share compared to their rivals like Apple Music, Amazon Music, and also YouTube Music. So right now Spotify has about 32% of the global music subscribers in the first quarter. Apple is currently in second place with 16%. Amazon and Tencent are tied at 13%. And then you got YouTube Music from Google, which is at 8%. And apparently in the first quarter of 2020, Spotify lost 2% of the market share, which is pretty crucial in my opinion. But out of all the players, I believe Apple has the most music on their library. But that doesn't stop the fact that Spotify's algorithm is really great at recommending new artists and songs. And I'm personally a customer, so I'm really aware of it. But does this headline and news kind of affect the fundamentals and the long-term growth of Spotify? To me, I feel like Spotify's growth can still continue, but just not as fast as it used to be. But I'm really glad that Spotify got into podcasts really heavily. So yeah, I'm just gonna quickly go through the stock and give my opinion on their valuation. So over here, unfortunately, there isn't a forward EBITDA because they're not actually making any money at the moment, and they're not generating any profits. So right now they are a money losing business, but we have to consider that most of the cash flows gets reinvested into the business, and this is a growth company, not like a value stock, so we have to also remember that. So right now Spotify is trading at a $49 billion market cap. Okay, yeah, and their enterprise value is about the same. So since we can't find a forward EBITDA, I'm just gonna find their trading enterprise value versus their gross profit. So over here in 2020 they have a gross profit of $2.4 billion, and since their enterprise value is at 49.26, so they're trading at roughly a 24 times trailing gross profit. And personally I want that a little lower, maybe at about 20. And I like that this company is growing their revenues by about 20% year over year. Right now they have a current ratio of 1.27, and they have a total debt of 1.89 and a total cash of 2.98. So I know that they're able to kind of pay off their debt today if they wanted to. So that's a great sign that this business won't kind of go bankrupt anytime soon. The only time when a company goes bankrupt is when they have a lot of debt and a little amount of cash, meaning their leverage is way too high. The reason why Spotify is kind of trading at a really high valuation is because they are producing cash flow. Because remember, at the end of the day, we want to invest into a business that produces cash, because if the business produces more cash, then they can kind of reinvest that into their business or even reward their shareholders, because they're kind of giving money to a business to make more money, right? Like I said, they are a money losing business, and last year they did lose about $581 million. So overall, I do think the price is a bit overvalued due to the valuation, but that doesn't mean I don't like the business, because I am a customer myself and I am very loyal to Spotify. But one of the issues that I'm seeing with the company is that they have really little revenue segments. All they're kind of relying on is on their subscription model. But if you look at the bigger tech companies, they do bring in other sources of revenue. But yeah, that's the only thing that's kind of bugging me. But my expectations might be way too high, because I do also think they should just fully focus on their premium subscription until that's perfected, and then find another source of revenue segment later on. But we'll see. I really like Daniel Ek, the CEO and founder of the company. I did watch a couple interviews on him, and his thought process is pretty insane. So so I wouldn't want to bet against him at all. But yeah, I'll give this stock an interesting rating, but it's not screaming buy to me, but it's worth putting on a watch list just in case there is a pullback. Next up, Apple wants to boost their iPhone production by as much as 20% after last year's 5G super cycle. So for those that don't know, 5G is pretty much the next generation of telecommunications. So Apple is calling this a super cycle, meaning there's gonna be like a major overhaul on their iPhones. As a tech person myself, I already know the rumors, and Apple's next iPhone won't be that, significant of a change. The notch is just gonna shrink a little bit, but in terms of the body of the iPhone, it's gonna be the same. And the internals, obviously there's gonna be improvements, but that's about it. But I'm more excited about the 2022 model because apparently there's not gonna be a notch anymore, and there's a slight chance that Apple might do a flip phone. But yeah, I also wanted to go through Apple stock. So if we dive into their valuation, they have a forward EBITDA of 21, meaning it'll take 21 years to get 100% ROI if Apple just produces the same amount of numbers today for the rest of eternity. But obviously it's not going to take you 21 years because Apple does grow as a business and they make more sales year over year. But Apple stock really isn't a growth company anymore, because if we look at their revenues, it is a little bit stagnant, but they did make a record-breaking revenue for 2020. But I do like a forward EBITDA of anywhere below 25 because their revenue growth is just meh, but they do have a dividend and they provide a lot of cash flow. So if we look at their balance sheet, it is pretty healthy. They do have a current ratio of 1.14, so they do have more assets than liabilities. What worries me is the debt, because they do have more debt than cash, but we have to consider that they have a lot of cash flows coming in every quarter, so they can kind of pay off the debt whenever they want. Because if we look here, in the last 12 months they generated a free cash flow of $90 billion. But yeah, I feel like Apple is just using leverage on their side, and I think the risk to reward ratio is pretty good. But yeah, overall they're trading at a $2.48 trillion market cap. Fun fact, Apple is currently the biggest company in the world, and they do provide a dividend of 0.6%. But yeah, overall I think Apple is one of the safest stocks in my opinion, because they have multiple streams of revenue. Like they have Apple Fitness Plus, Apple Watch, iPhones, Macs, Apple Music, and the list goes on. But yeah, I used to own this stock and I kind of regret selling it, but it is what it is. You can never really time the market. In the next article, I want to talk about Logan Paul, because this guy created a new coin called Dink, Doink. Like one glance at this and I can already kind of tell it is a scam. And he even tweeted that this is the most dumbest thing, but he's still all in. And I'm just like, what? But yeah, let's watch this video and see what it's all about.
You're my favorite coin. Want you to dink on my face.
Alright, no, this is a total scam. I don't know how people are falling for this. So this coin literally, this is totally a pump and dump scheme, right? You can already tell by the charts. No need to look any further. But seriously, don't fall for these scams, especially with influencers these days, because we did see something with Save the Kids coin. But yeah, I just feel bad for the fans that actually believe in this, and they're hoping to kind of make that quick buck. But yeah, it's just a shame because it makes Bitcoin and crypto look really bad, but it is what it is. Just use your own judgments. Next up in crypto news, it seems like Paraguay is proposing a Bitcoin law to kind of make Bitcoin legal tender in Paraguay. I did make a video about 2 weeks ago regarding this. I feel like the next country to make Bitcoin legal tender could be Paraguay, because their politicians are very bullish on it. But yeah, I'm not gonna dive too deep into this, but I won't be surprised if it does go through, and that could be a new catalyst for Bitcoin. That wraps up for this video. If you're interested in buying crypto, please head into my referral links in the description box down below, and we can both get a small cash bonus once you sign up and make some trades. If you enjoyed this video, please smash that like button down below for the YouTube algorithm, and if you haven't already, feel free to subscribe and hit that bell notification so you can see my videos every single week. That's pretty much it, and I'll see you on the next video. Peace.